Hi everyone. Once again, welcome back to my channel. So briefly, we are going to look at BTC, Bitcoin. There has been a lot of controversies out there that can ICT's strategy, ICT's SMC be used in BTC analysis, and I can bet you hands down that ICT strategy works fully on any kind of asset pair, and practically I have backtested ICT strategy on BTC for a couple of times now, and I bet you if you are really inclined to ICT's teachings and his materials, you realize that ICT's strategy fully works on BTC. So tonight I'm briefly going to take you through a walk through BTC. We are going to start from a higher time frame down to a lower time frame. We are solely using ICT strategy. Okay, so quickly let's walk through. All right, so on the first slide, so I'm trying to make this presentation as brief as possible. I'm going to really be quick with it so that we don't have to waste a lot of time writing here. All right, so let's be quick with it. Okay, so on this slide, you can see this is a monthly time frame showing us exactly where BTC currently is, where we can see that we have an area where price is showing that we have prices traded into a fair value gap, okay, on the monthly time frame. All right, price is traded into this fair value gap, and we are expecting to see a reversal right from this side. Okay, this is on the first slide. Let's go to the next slide. So clearly you can see that I've depicted the fair value gap with these lines right in there. And oftentimes people ask that, must all fair value gaps be fully rebalanced? Okay, so this is a buy side imbalance, sell side inefficiency. Must it be fully rebalanced? Usually not all the time. It doesn't need necessarily fully rebalance at a specific time, although in later time price may come back and then do the rebalancing, but then it doesn't always necessarily happen at a specific time. Okay, so with this we are seeing on the chart, you could see that there's a slight remainder of a fair value gap right in there, and must this fair value gap, the remainder, must it be rebalanced before price continues or surge upwards? Well, let's move on. We would get to know whether it has to do that. Okay, so right in here we are down to the weekly time frame, and you could see that, coupled with the fact that on the monthly time frame there was a fair value gap on the monthly time frame, as well as on the weekly time frame, we could see that exactly where price is traded into, there is also a fair value gap on the weekly time frame. So when there is such confluences between the higher time frames, like for instance on the monthly time frame we have you have a fair value gap, and then when it comes down to the weekly time frame, it's still coinciding with another fair value gap in there. And then this is more of an area of a strong liquidity where price would usually draw into. Okay, all right, so on the weekly you could see that this is more like it's a conjunction of two fair value gaps in there on the weekly time frame. Now, the next thing I want you to understand from this swing that we have in here, that we had the fair value gap happening right in there, as simple as this. Now, when you look at the fair value gap, where it occurs, it actually occurs in the middle of a swing. Okay, so where does the swing start from? The swing starts from a particular point, from that low all the way to that high. Okay, when you look at the swing low from where the price moved all the way to that high, when you pull a fib, okay, when you pull a fib from the low to that high, you could see that where that 50% of the market is delineated, you could see that it is still within that fair value gap. Okay, 50% of The market is still delineated within that fair value gap. And then the lower portion of that 50%, which is regarded as discount price levels, okay, you could see that price didn't necessarily dip close with the body of the candle right beneath the 50% level. Price dipped into the 50% level. And in a bullish market situation, okay, what we usually want to expect is that we want to see market go into discount prices and then seek for liquidity there, rally up back into premium. Okay, so in this situation where we have price actually going into the discount prices that's below the 50% level, and then we can see that price is reversing up, it automatically tells us that price has actually taken orders from the discount side and is going to run them into premium levels. Okay, and that is why price traded into below the 50% level. All right, now let's move on to the next slide. Okay, so what you can see right in here is represented on the daily time frame. So beautifully on the daily time frame, we could see the remainder of the fair value gap that is also represented on the hourly, on the weekly, and then the monthly time frame. Okay, now just like what I said earlier, that whenever there is a confluence between the weekly time frame, the monthly time frame, and the daily time frame, you should know that it's a very strong area of liquidity. Okay, so you could see that on a daily time frame, equally there is some confluence that you could see that there was a fair value gap also happening on the same area on the daily time frame. Okay, so this is a strong area where price necessarily needed to draw into and then take more orders and then rally up. All right, now you could see how price has traded to this level, and then we see the remainder of the fair value gap, which is a very tiny area that probably in future price can dip back into and then take orders from there and then wherever it wants to go. Okay, now apart from seeing the remainder of the fair value gap, look at the chart. What you see in here, you could see that the last point where price actually went into and took the sell side liquidity resting below the lowest point in the fair value gap. You could see that I have delineated that with this purple line, okay, which shows you that there was a sell side liquidity in there that price actually dipped into and then continued to rally up. Okay, when we see such a scenario, okay, now the orders resting below this previous low has been paired and then price begins to rally, and you could see how sharp or how quick price had to rally up. Okay, so that quick rally up has actually left what we call an order block. Okay, yes, this is where we find what ICT calls as an order block. Okay, yes, so that quick rally up is what ICT calls an order block. Okay, that quick rally up, that's what ICT regards as an order block. So now we could see how beautifully that order block has been formed in here on the daily time frame. Okay, and then price retraces back into the order block and then continues to surge up further higher. Now what happens? For instance, we've seen that area, that bearish candle in there, is what has actually formed what we call the order block. Okay, because it swept the low almost at the edge of the fair value gap, the monthly fair value gap, and then it continues to rally up higher. Now what happens in here? As we've got in here, what necessarily is going to happen if price has done that? What necessarily is going to happen? Now let's go down to our next. You could see that now the bearish candle that traded back into the order block. Okay, listen to me here. I want you to get this right. The bearish candle that had traded into the order block. Okay, you could see that on the screen. That traded into the order block. What it did was that it actually gave us the confirmation that yes, indeed, this is an order block. Okay, And then the candle that also formed, the bullish candle that formed right after it, also gave a further confirmation that that was an order block. So now, two other blocks has been formed or have been formed. Okay. So if another order block has been formed right after a first order block has been formed, what it gives rise to is called a propulsion block. I think that's not the right spelling. It's a propulsion. It means that something that propels price to search up further higher. Okay, it's a propulsion block. Now watch this. That second order block that has been formed, which we call ICT calls propulsion block, price hasn't actually traded back into it. Okay, we could see that all price did was it rallied away from it. Price hasn't actually retraced back into that propulsion block. So what we're expecting is that price would necessarily retrace back into that propulsion block, and then we want to see a surge up higher. Okay, now so I put some scenarios in here why we would want to see probably that propulsion block to propel price to go up higher. Okay, and we could see that there are more of buy side liquidity resting up there that price necessarily need to go and hunt. Okay, so probably someone may be saying that, or rather I'll be expecting price to instead go back and close in on the remainder of the fair value gap because it's a strong liquidity area. No, rather there are also more liquidity points resting above. You can see the trend line that I've drawn right in here. This is the retail mindset of trading trend lines. Okay, they look at the trend lines and say that, okay, well, these are trends that price shouldn't break and all that, but these are areas of liquidity. Okay, that all the highs that are in there are buy stops resting above them. Okay, that the market necessarily sometimes needs to take. All right, so this is what they usually say. They say that, okay, so those areas are resistance levels, so rather they place sell orders there. Okay, pending sell orders, that when price gets there, it shouldn't break that high. It should rather trigger their sales and continue down. All right, and that they say, okay, if it breaks the high and it continues up, the trend has been the resistance level has been broken, so price should continue higher. You know, that's the notion of the retail mindset. But then these are areas of liquidity. Another area of liquidity that I've indicated in there is the buy orders resting above. Can you see these relative equal highs? There's a high in here and there's another high in here. Okay, this is what ICT regards as the relative equal highs. Okay, whenever there are equal highs, the retailers say that, oh, this is a resistance level and price shouldn't break that level. So what they do is that they put buy stops above it. Okay, so that's why we call buy side liquidity. They put buy stops above it, hoping that when price gets there and it breaks above those highs, price should continue higher. Okay, and then the market go trigger their orders, trace a little bit down, and then gets them out of the market. Okay, so the retail mindset doesn't always work for the market maker. Okay, the market maker is always against the retail ideologies. All right, so beautifully you could see that these are clean highs that price necessarily needs to go and sweep the buy side liquidities in there. Okay, they have more orders that they need to go and clear from that side. So it's an area where we're expecting price necessarily to trade in there and take orders. Now, beautifully, what's the next thing that we want to expect price to do? If price goes into the propulsion block, what next? What next? How is it going to be? Where are we going to take the trade? Now, let me go to my next and show you right in here. You could see that there is a tiny fair value gap just before the propulsion block. Okay, which gives you a clear one of the clear indications that ICT in his explanation gave us about what an order block should be, is that one of the things is that an order block, one of the defining rules is that, especially when it has a fair value gap just before the order block, it makes it more solid and concrete. Okay, not every order block has a fair value gap before it. It's not every, but if it has, it makes it more concrete, because because there are others that are resting, or that there's an imbalance in there that price necessarily needs to trade back into that area, rebalance the market, and then take it up higher. Okay, so that is that is when we have a bullish scenario. All right, now let's look at this, coupled with the fact that we are seeing the proportion block. On the other side of the proportion block was a fair value gap that price had traded into. Okay, so you could see that I have indicated in here as in the inverted fair value gap. There was an inverted fair value gap that price actually traded into, went up higher. So what I'm necessarily expecting is that if price retreats back into this inverted fair value gap, I wouldn't want to see price close. This is still on a daily time frame. I wouldn't want to see price close above the inverted fair value gap. Okay, I wouldn't want to see price close. Sorry, I wouldn't want to see. Let me put it well. I wouldn't want to see price closing with a body below the mean threshold of this inverted fair value gap. Okay, and what my point is that anytime we have a proportion block, I usually want to see that price actually does about 25% of the proportion block, and then it does the reversal. Okay, with the body in question, with the body in perspective. Okay, not the wicks. You know, just like ICT, the wicks are always doing the damage. All right, so I'm expecting that price actually retraces back into this, and then even with the proportion point, I wouldn't want the market, or I wouldn't want price to close with a body below the mean threshold of this proportion block. Okay, and this is, you see, this is purely algorithmic. Okay, for those of you say that ICT is a scam, and well, you haven't studied him well, you haven't studied the materials well, you haven't taken your time to listen to him well. I would encourage that you listen to him well, and your life would be a different situation. Okay, all right, so now let's continue. So just like what I'm saying, we have an inverted fair value gap happening right in the proportion block. I'm expecting the proportion block to be one of the areas where price would just bounce off price, where we'll look at attacking the buy side liquidity resting above those relative equal highs. Okay, now let's go so that I give you more insight. Now we are looking at the proportion we are looking at where the inverted fair value gap is. Okay, from the low of the proportion block to the high of the proportion block. You realize that from the low of the proportion block to the high of the proportion block, you realize that, let me go back once for you to see. Now, if we go back once, look at where the low, or where the body of the proportion block is. Okay, to the high of the body of the proportion block. Now, when we pull a fib and we look at where the mean threshold of the inverted fair value gap on a daily happens, it is in confluence with the 75. So let me say it's in confluence the 25% level of the proportion block, and probably and necessarily I would always want to expect price to do a reversal around that same area. Okay, so beautifully, that is what yes, another person could say that, okay, let's go back. Why didn't you consider taking the proportion block from the wick to the wick, but rather you considered it from the bodies only? You know, when the proportion block has a beefy body, I rather consider the bodies and ignore the wicks. So that is for me. All right, now beautifully, apart from the fact that we are seeing what is the proportion block in there, you could also see that there is a breaker happening right in there, and it is in confluence with the inverted fair value gap, and it is in confluence with the 25% level of the proportion block. Okay, so it's a strong area of resistance where I wouldn't want to see price violate, although price can violate with the wicks, especially on the daily, but I would want to still see price retrace back from that level. Okay, so all my buy entries will be framed around that level. Okay, all right, so on the next chart, currently where we're trading is where I indicated as seen, and you could see that price is reversing. Price is actually retracing back based on the fact that there are sell side liquidities resting in there. That's the trend line phantom, or all these are engineered liquidity. Okay, so price actually would want to retrace and take all these liquidities quickly, and then retrace back into those areas of interest where we are expecting price to reverse. Now, when you pull a fib from the low to the high of the current swing, okay, you find out that 50% level is just at the tip of the fair value gap. Okay, sorry, the inverted fair value gap, just at the tip of it is where you have the 50% level, which is just into discount. So we're expecting price to trade into discount, and then we want to see a reversal up. All right, so you could see that I've indicated it with a fib that, okay, so 50% level is where we're expecting price to retrace into, and then we want to see a bounce up higher. All right, now the next item. So basically, there are other areas of interest that price necessarily needs to grab before we want to see price rally up higher. You could see that there was some trading sessions that the low that was created in some of the trading sessions that price necessarily probably may take them. With the New York is much closer, it may sweep it quickly and then quickly run with it upwards. So this is the little that I can see on the chart, and I am more certain that this is what price necessarily will do. Okay, so that is BTC for you, and you could see that practically ICT's strategy and analysis works perfectly on the chart. So I don't get it when people say that, oh, ICT's material is for some specific asset pairs. It's not so. Okay, it's not so. If you are new to my channel, please do well and subscribe, like the video, give me a comment, encourage me to record more. Okay, so this is just briefly on the surface. Another time I'll take you much more deeper with much more of the ICT concept, especially on Bitcoin. Okay, and this is Bitcoin, especially on it. I'll take you much more deeper for you to understand that ICT's concept actually works much more effective on BTC than any other whoever comes to tell you that, okay, trade this, do that, and all those jailbreaks. Okay, so I want you to stick with me on this channel, and then I'll take you through the journey. Please like and subscribe. I wish you all the best in your training journey. Have the best of the day.